Actually, I think a little bit of management of expectations at this stage is probably a good thing. And I think if we look at the closest counterfactual, which is probably that there would have been a series of kind of checkpoints. If this is reached in the phase 2 deal, then we'll reduce tariffs. If this is reached in the phase 2 deal, then we'll reduce tariffs. The likelihood in reality that they would have met those checkpoints in terms of the negotiations seems very small. So I think we might actually have avoided a situation where there would have been a lot of volatility around that type of a checkpoint. And now we just kicked that phase 2 deal way out into the long grass, really where it had been in reality. But people seem to have been choosing to ignore that fact until now, judging at least by the market reactions. Or that initial market reaction could have been just a kind of a jitters over whether the phase 1 deal will actually be signed and how the Chinese would react to this. The phase 2 deal, though, I think probably is in the long grass. The phase 1 deal has taken such a long time to get over the line, and that was really the low-hanging fruit, or the low-hanging beans, if you like, just to put a terrible pun in there. But that was the low-hanging fruit, and that's already been picked now. Hopefully, if this phase 1 deal gets signed, the phase 2 was much more difficult, looking at the real kind of structural issues between China and the US, and the fact that that's been kicked back into the long grass is probably not such a bad thing in terms of the volatility that it could have ensued if we had those checkpoints.
Well, leaving the phase 2 deal to the side for a moment, given it is a ways off at this point, the enforcement mechanism has been one of the key sticking points and hurdles for the U.S. in terms of getting to this point, the phase 1 deal. I mean, what are the chances that China is willing to not only accept an enforcement mechanism, but that the U.S. is actually able to create a mechanism that is, feasible for them to actually implement? So how is that going to work in the phase 1 deal?
My hope at this stage, again, from a perspective of things actually matching up to what they're expected to in reality, is that there's a significant degree of vagueness from the phase 1 deal text. And it seems like that might be, from the latest comments that we've had from the US side, we might be seeing that degree of vagueness coming through. Those numbers that Mr. Trump has tweeted as to the 200 billion of imports from the US by the Chinese over the next 2 years, and the agricultural purchases of 40 billion in each of the next 2 years. When I first saw those numbers, it was a bit like, did I understand the Chinese trade data correctly? Because they seem like pretty big increases on what we have at the moment. If we take the goods imports even before the trade tensions began, they were sitting at about 150 billion. And okay, that doesn't include services, but that's maybe if you add another kind of 25% on that. So the base from which to grow this extra 200 billion is quite small. And if you're kind of romantic about things, then you might worry about little things like WTO rules and annoying other countries and deals with other countries and the displacement that could mean. And turning to the purchases of agricultural products, there's little things like kind of climate and geography which make it difficult for China just to say, okay, well, we'll purchase many more soybeans from the US. If you look at the data, it's very seasonal. So for part of the year, they purchase from Brazil, part of the year they purchase from the US, and that's just because the growing seasons are different. So to get around that type of thing in reality is quite difficult. It's not all bad news in the sense that they'll have to they're starting from a kind of a lower base at this stage because they've already been reducing purchases.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.